Welcome to Subramani. I have been intrigued that the growth in banking in India has been much better after 2014 when some kick-ass schemes like JAM, etc., have been introduced and banks have been kicked into opening more bank accounts. Having said that, yesterday I saw a news item saying that IRDA has set a premium growth target for all its players. So let me just read from there. Um, this is an article in Business India about that, saying IRDA wants life insurance firms to eye 50% premium growth in 5 years. And this really set me wondering, why is the regulator talking like a association of insurance companies, right? That is the job of the association, to talk about how the industry will be, how much it will grow, etc. But here is a regulator who is saying there must be a 50% growth over the next 5 years. Now, what? How are you going to set the targets, and why are you setting premium targets? If you are a life insurance company, the target should be the sum assured, right? So, if you set sum assured targets, at least the companies will work on term insurance. Otherwise, they're not going to work on term insurance. They're going to work only at product which is a high premium. Now, if you say launch the product and then after you use it we will see whether any approval is needed, because they have said no approval is needed for some products, so based on self certification. Now that is how exactly it works even in case of SEBI. If I want to launch a product, I have to make sure that it is within the norms. Like I can launch a pension product or a child product or a children's plan or anything like that, and if SEBI does not say anything within the next number of days, I think it is 90 days, it means the product is approved. SEBI says very clearly the product is neither approved nor disapproved by SEBI. And we are not even saying the information given to you is adequate. It is for you to know what more information you want. Now that's a good caveat to put, but the thing is with insurance, I'm stuck for 5 years. I have to know what is the withdrawal and all the withdrawal clause. So I may not understand the product, and the product may be made a little inefficient, and they could have other charges. But that apart, can a regulator go and say you have to grow at this much? And if he does say that, should he just say the premium growth target? How does it really matter? Secondly, can there be a penalty on an insurance company for not achieving the target? That sounds very odd. And this, if you ask me, is extremely shareholder friendly. Will it be very investor friendly, or will it be good for the policy holder? I seriously don't know. So, which means if our company has to grow at a particular rate, it has to have more number of people selling the product, more number of point of sale, more recruitment, more training, more retaining, right? All those things will have to be put in place. Nothing wrong with this asking for penetration, but the targets to be set by a regulator to me sounds odd, and it's the first time. Now, Reserve Bank of India did not tell bank that they should open more accounts. In fact, Reserve Bank of India was not very keen to give too many licenses, which has held back our banking. Even now, if we have some more rural banks and banks which are concentrating or just catering to say senior citizens, or a bank which is catering only to a particular location in Bombay and all, we used to have something called a cooperative bank which used to be very local. You would have Kurla Bank, you could have a Chembur Nagarik Bank, you could have Nerul Cooperative Bank, right? You could have each location having a bank, and that could be successful, but that model didn't work much. But banking penetration was not got by increasing the public sector participation. Of course, we got a lot of rural participation, but now I see private sector banks also going to rural India, not as a favor to the client, but because they think they can get more deposits there, right? So for whatever reasons, banks are going to rural India and getting money, but that is the bank's prerogative. Should a regulator set a target? To me, that is the question, and I don't have an answer. Can there be a penalty for not achieving the target? I don't know. What would you do if a guy is way below target? You said 50% over 5 years. What if they are at 30% over 5 years? What happens if a insurance companies small and they're able to achieve, but the biggest ones like say LIC may not double itself over the next 5 years or next 3 years, whatever is the target for them. It's very difficult for a company with an old book to suddenly increase the premium, double the premium in 3 years or 5 years. It's almost impossible. So why have they done this really beats me, and I do not know how it works because I have never seen a regulator asking a company to grow at a particular rate. They may say we will allow more companies to come in. We may allow companies to, we may dilute the requirements needed for selling in rural India. We may put a cap on how much you can sell per person. If you, for example, I may put a cap saying you cannot sell you cannot sell unit linked insurance with premium more than 3 lakhs of rupees or 2 lakhs of rupees unless you have sold him a term insurance, sold her a term insurance of X amount, right? So we can put some of those clauses, but putting a target in a communication to the MDs and CEOs of life insurance companies, the insurance regulator has suggested gross written premium. This is as of now just a suggestion. It has not been forced, but I don't know how it will be enforced, right? So it says IRDA has given each life insurance guy an indicative targets in terms of gross gross premium for the next 5 years. And Business Standard has quoted Rishabh Gandhi of India First Life Insurance, and it says it was also offered to discuss any regulatory support. I mean, to me, that word is very scary. Can a regulator support growth? And then, if the regulator and the company both want growth, which is what the shareholders want, will there be dilution in regulation? I really don't know about those things. And what is GWP is the new business premium, including the renewal premium. And the regulator has identified a state for each insurer so that it should spearhead the push for increased insurance penetration. I don't know how the whole thing works. Yes, of course, we are all seeing that UP is doing well currently. Does it mean that UP will get more business than Mumbai? I doubt, extremely doubtful. I don't see that happening in insurance. If I have to employ two people, and that's all, I would put both of them in Bombay. I will not put them in UP as of now. Yes, after some time maybe, but right now I'm not very sure about the insurance penetration in other states, so depending on which state I get, right? So like BS says, it's the first of its kind advisory from a regulator. Aim is, of course, the regulator is saying aim is to increase the insurance penetration. I really do not know whether this is going to help. Large insurers have been given a 30% target. Smaller companies, the target is about 40 to 50%. Life insurance penetration in India is 3.2%, while overall insurance protection stands at 4.20%, right? So I don't know how it works. I seriously don't know whether there will be some regulatory compromise to want growth. So there is a role of a regulator, role of a association of insurance manufacturers in India, like Association of Mutual Funds of India. That is an association of some of the big manufacturers. I mean, all the manufacturers are there, but all the players are not there. So understand, it's a manufacturers association. So similar, and then there are the players. Now the role of the first body, that is the regulator, and the association cannot get merged. So I seriously don't know how the whole thing will work. Right now it is only in the suggestion stage. Will it be implemented? How will it be implemented? Will be very interesting to watch. So watch the space. You're going to see more of it here. Thank you.